Imagine waking up tomorrow morning and finding out your bank collapsed. What would you do? How would you react? Well, guess what? It's happening right now. And how do we get there? Well, you're going to find out. You should stick around because this is going to be very good information that I'm going to be giving you. Today we're going to be talking about the major financial crises and developments in recent times. This is from the European and US markets. We're going to be talking about how the collapse of big banks like Silicon Valley, also known as SVB, Credit Suisse, and how we are going to be affected by it and what should investors do to react to it. The stock market has been hit hard by the crisis. The banking sector saw huge declines because investors were worried about that other banks might face similar troubles. However, some sectors managed to turn this crisis into an opportunity. For example, gold and other safe haven assets saw a surge in demand.
Crisis periods typically cause high volatility in the stock market, but for long-term investors, these times can present opportunities. When panic hits the market, buying assets at lower prices can pay off in the recovery period.
The banking crisis is also affecting the real estate markets. This is because banks are becoming more cautious about lending. And what this does, it makes it much harder for people to get a home loan. And also, that home loan is also a much higher interest, making real estate much less affordable.
So, what should investors do in this situation? First, before investing in banking stocks, carefully examine the financial situation of these banks. After the crisis, banking stocks can be highly volatile and carry significant risks. Diversification is key during times like this. Investors shouldn't limit themselves to stocks and the banking sector. Gold, commodities, and bonds are safer assets that can help stabilize your portfolio. Additionally, if you're looking to invest in real estate, you need to be cautious. While rising interest rates make mortgages more expensive, there could still be opportunities for long-term investments. Especially after the crisis, government interventions may help the real estate market recover.
In conclusion, banking crises can both disrupt the stock and real estate markets. However, this can also create opportunities. Investors should try to avoid panic and try to create a long-term strategic investment. You should also try diversifying your portfolio in these times, as that can help you a lot. Historically, crises like this have always created the best buying opportunities, whether that's real estate markets or stock markets. So I best recommend you that staying calm in the situation and having a good plan, knowing what you're doing, will be very beneficial for you.